So Chandhok PLC, this came from the June 2020 paper 1, section A, little 5-mark question on a statement of changes in equity. So we've been given last year, 31st of March 2019, last year's figures straight from the statement of financial position. Now the statement of changes in equity spins that round from a portrait layout to a landscape layout, puts them in across here. So it's explaining how we've got from the figures at the beginning of the year to whatever ends up on the statement of financial position at the end of the year. Okay, so we've got issued share capital, we've got share premium, we've got retained earnings. So things that might happen in here could include revaluation, rights issue, a bonus issue, profits for the year, losses for the year after tax, and dividends paid. So let's just see what additional information we've got. It tells us here that each share has a nominal value of 50p. Now, to avoid going wrong, we either need to divide the share capital by 500,000 to find out how many shares there are, or I think a safer way of doing it, because the temptation is to multiply by 0.5, in which case you end up with half the number rather than double the number. I think the best way to do it is to work out how many you can get for £1. So if we can get 2 for £1, we've got £500,000 worth times 2 or divided by 0.5, whichever you prefer, means that we've got 1 million shares at the moment. So 1 million shares with a nominal value of 50p gives you 500,000 of share capital. Okay. On the 1st of April 2019, the directors made a bonus issue of ordinary shares on the basis of 2 new shares for every 5 existing shares. Okay, so to find out how many, so remember the bonus issue is free shares that have been given to existing shareholders, so it will increase the issued share capital, but it will reduce the other reserves. And it says that the directors intend to maintain their reserves in their most distributable form. That means the form that we can pay dividends from, which are these retained earnings. So what we've got to do first of all is work out how many shares. Now, when it tells you 2 new shares for every 5, always keep the numbers in the same order and turn them into a fraction. So 2 over 5, 2 new shares for every 5, and then multiply it by the number of shares we've currently got times 1 million. So 2 over 5 times 1 million is 400,000 new shares. Okay, now they are 50p shares, so it means we've got £200,000 worth of extra share capital to put in here. Okay, so let's pop that in here. So we can put bonus issue of shares. We are increasing the issued share capital by 200,000, but we've got to pay for it, in inverted commas. So we've added to this. Overall, bonus issue won't affect the value of the business at all. So it's just going to be taken straight out of the share premium account. Okay, if there wasn't enough in share premium, you might need to use retained earnings, but always try and use things like a revaluation reserve or a share premium account before you start dipping in to the retained earnings. Okay, so it's going to have no effect on retained earnings. And if we did have a total column, it's got 0 effect overall. All it's done is increase the issued share capital and reduce the share premium. These are free shares given to shareholders instead of perhaps giving them a dividend. 1st of July 2019, though, there was an interim dividend of 4p per share. Well, the first thing we need to do is convert that into a pound amount, because if you start multiplying number of shares by 4 rather than 4p, you're going to bankrupt them. This was paid on all shares in issue at the date. So it's 4p times the 1 million shares plus the 400,000 shares. So it's 0.04 times 1.4 million. So that is a dividend of 50, it's early in the morning, £56,000. And the other bit of information is that profit for the year was 72,100. So when we come to sort out the retained earnings, always put the profit for the year in first. So this is the profit for the year after tax, 72,100. If they gave you the profit for the year before tax and then told you the tax, make sure you take one away from the other before you pop it in here. And then dividends paid is the next line. And if you've got more than one dividend during the year, make sure you add them together. Don't go putting lots of different dividends in here. Dividends paid can only come out of the retained earnings column. So we've got £56,000 there. And then the last thing to do is work out what the balances are at the 31st of March 2020. So this is just going to be a total of each of the columns. So the issued share capital has now got 700,000 in it. The share premium has got 84,367, and the retained earnings we had 346,345. Now got 72,100 in profit minus the 56,000 in dividends, leaves us 362,445 in the retained earnings column. Easy as that. Thanks very much for watching.